Hey everyone, this is Chris Zaphoid Karabats with SmartCash SmartTalk Radio, and this is episode 4. And today we're very excited to have Trace Mayer here with us to talk about his Proof of Keys initiative, as well as whatever else we end up talking about, because Trace has been in this space longer than almost anybody else. So he's a wealth of good information. Why don't you go ahead and say hi, Trace?
Oh, thanks so much for having me. And what is it? Experience. You need experience to make good decisions, and experience usually comes from bad decisions. So, yeah, I guess I got more gnarly battle scars than most people.
Yeah, there's a lot of people in this space that got a lot of experience over the last year. So we hope that we can leverage that as we keep moving forward. So I'd like to give you the opportunity to just introduce yourself real quick, because there may be some people watching this who don't actually know who you are, particularly if they are quite new, and just give a little bit of your background for our listeners.
Yeah, so I host the Bitcoin Knowledge Podcast. I interview a lot of the top people in Bitcoin and the crypto space. I'm a seed investor in BitPay, Armory, Kraken, and some other Bitcoin startups. I've been a thought leader in the space since is like a nickel-ish, more or less there. So when people trace like their intellectual lineage back, a lot of them, one way or the other, would probably find their way to me. Like I sent Michael Maloney his first Bitcoins and helped him understand stuff. Jeff Berwick, Jeffrey Tucker. Just there's a ton of people that I've influenced in the space. Millions and millions of views and all that stuff. So, yeah, I just love to help people understand the concepts of monetary sovereignty and how they can claim it for themselves.
That's great, and that's a message I fully support and get behind. And it's so important. We've spent so long just leaving our stores of value in the hands of other people. So it's great that we finally have the tools to take that back for ourselves in the crypto space. Speaking of that, what drew you to Bitcoin at 5 cents? I mean, that it obviously wasn't because you thought you were going to make millions of dollars on a 5-cent cryptocurrency overnight.
Well, not overnight, but no, I'd read Pieces of Eight by Dr. Vieira years earlier. I had read Human Action, Man, Economy, and State, a lot of the Mises, Rothbard stuff. So I had a solid foundation and understanding philosophically and with political ideology, stuff like that, when it comes to hard money and sound money, and also the economics understanding. Then, being in my particular generation, understanding the role of censorship resistance with things like BitTorrent versus Napster, having played around with eGold and Gold Money, and a lot of these things. So when I came across Bitcoin, and PGP encryption, I was playing around with that in middle school and high school. So when I came across Bitcoin, I was just I could connect a lot of the dots. It's hugely interdisciplinary. It's highly complex, very complicated. There's a lot going on, a lot of different fields of knowledge that you kind of have to understand. But I kind of see the really big miracle was it getting to $100. And after, got there, it's kind of like, it's got that beachhead in terms of the monetary sovereignty. And, I love all the innovation that's happening in the space. Sure, a lot of it's like shady ICOs and everybody showing their coin of one kind or another. But, I look at it as just a Cambrian explosion, and we have to have a lot of this research and development or tinkering to find the stuff that works, and a lot of the altcoins, I see them as excellent test beds for features that could potentially become useful and get rolled into Bitcoin, because if we can prove the use case in an actual adversarial and economically substantive environment, things like SegWit getting activated on Litecoin first, and then $1 million worth of Litecoins being sent into a SegWit address, well, that shuts up a lot of people real fast that are like, oh, SegWit's not safe. It's like, well, if it's so unsafe, then why don't you take those $1 million worth of Litecoins? Like, prove it, And being operating in these adversarial environments where these blockchains do, like there's no real substitute for that, you know. Like if you're doing all your testing like on a closed system that's not connected to anything, okay, bubble boy, like come play with all the sewer rats, you know. They got better immune systems.
Exactly. So you don't think that a government monopoly of money is the way God designed our world or anything like that?
Well, no, I mean, definitely subjective value theory. You know, people value money because it has value in itself, and so this fallacious idea of chartalism that money or currency has value because the institution of the state deems it so. Like, if that were really the case, then why is Venezuela hungry right now? I mean, like we have how many thousands of these altcoins in the fiat currency graveyard from all of these failed states. So, you know, now that Bitcoin's out there, you really have to change your perspective, and you have to look at all of these fiat currencies as just altcoins. Like they're just altcoins too. And what's their emission schedule, and what's their security parameters, and who decides like what it can do, and how are hard forks versus soft forks done? You know, all of this stuff becomes very important, and and so I mean that's how I kind of look at it. And none of these fiat currencies would have gotten any traction in the market had they not already had it, because you know they don't have very good features. I mean they're really just kind of jokes compared to what's out there. So you know, that's kind of my thoughts on that.
Yeah, that's a really interesting to think about, because you know the U.S. dollar and the older fiat currencies all sort of like piggybacked in on gold and then slowly pulled the gold out from underneath everybody's feet, and so they have their legacy behind them. But then you look at some of the newer ones out there, and you know they just came out of nothing. And well, of course, fiat currency, that's how everybody does it. And then you talk to people now, and they have no concept that no, money doesn't have to come from Big Brother. Money comes from ourselves. We generate it.
Well, and it never did, right? Like you trace it back, you got gold, silver, sodium bicarbonate with like seashells, all these collectibles. You know, then we develop a technology in order to start coining them, and then we like have standardized amounts, and that makes it easier to perform economic calculation. We go from single entry bookkeeping to double entry bookkeeping to now triple entry bookkeeping with Bitcoin, you know, debit, credit, and a confirmation in the blockchain. So, I mean, the long history of humanity's development is directly tied to the quality and the type of money and the tools and accounting that they're able to use. You know, I mean, is it any wonder that Isaac Newton, who developed the gold standard, laid such a foundation for prosperity that we're still coasting on? I mean, we're still coasting on so much of everything that came out of the Renaissance and just this age of reason. And now we're pushing it another step further with things like Bitcoin and distributed consensus and all of this stuff. So, I mean, it's just an incredible time to be alive. We've got sound money. It's going to change time preference, as Safedine talks about. You know, it's going to bring back productivity and a safe store of value. And this has always been a massive battle between the individual and the institution of the state, like who has control of the money. And you know, that's what the U.S. Constitution was. That war was fought over. France went the same way. They made holding gold and silver illegal. People started starving to death. Within a week or two, heads started rolling with the guillotines. Like tens of thousands of heads started rolling. Like you start screwing around with the money and having it impact people's daily life, like down in Venezuela and stuff, and heads start to roll. Like, you know, Martin Luther King marches were nice and sit-ins were nice, but it was the boycotts that actually started to really make the difference. And so, you know, Bitcoin and things like it, they're totally voluntary. You're not forced to use it, you know, and so that makes that makes the ability to perform economic calculation related to it much more efficient. And so if you're going to be using fiat currencies where people are forced to use it, you have to take into account all of this compensation in human action that happens as a result of people being forced to use them. And that's just not a very solid foundation to be building, you know, stuff on. And as Adam Back says, you can only build a secure layer on top of a secure one. And you can't build a secure layer on top of an insecure layer. And so, I mean, I look at these altcoins like dollars and euros and yen and stuff like that as insecure, not limited in amount, highly suspect, like altcoin scams. I mean,
yeah. I mean, there have been memes going around about how would you pitch the US dollar ICO, you know, centrally controlled, completely non-transparent, unlimited supply, emission schedule, arbitrary, you know, not requiring full backing of even itself, much less anything else. Yeah, it would everybody would laugh at ICO off the street. It's great.
Yeah. But, yeah, I mean, I made a meme like that, gosh, 3 or 4 years ago, and I put it out every year or so just to stir up discussion. And next thing you know, it's got like 500 retweets because it's so fun. but it'd be funny if it weren't so sad, because we're talking about the livelihood and the savings of millions, if not billions, of people that are tied up in these fiat currencies and retirement accounts and all of this stuff, and they've been totally mismanaged. The future's been spent, you know, in terms of the amount of debt that's been taken on. That's brought production forward. It's caused misallocation of capital on grand global scales, and there's really no safe place to run and hide except maybe like Bitcoin. So, okay, so you're going to put a size 50 foot in a size 5 shoe? Like, there's just not enough seats on the lifeboat. Like, people are going to have to go down with the ship of fiat currency and all of that misallocation of capital. And it's going to be sad, because we're talking about millions and millions of lifetimes that are going to just poof and evaporate. I wrote a book about this, you know, 10 years ago, The Great Credit Contraction. And, you know, it's sad, but on the other hand, people have an opportunity and they have a tool now. So if you're being greedy and staying in fiat currency and staying in your pension funds and stuff, I think that the crypto community, assuming they're the beneficiaries of this wealth transfer, they're just not going to be very sympathetic or empathetic to people who were speculating on these altcoin scam fiat currencies. And, you know, it's just too sad that you lost a bunch of your retirement or whatever having them. You had an opportunity to have something else. Why didn't you do it?
And that is so sad. And that's just part of the indoctrination that our culture, that all the cultures have gone into. Nobody thinks about money as an innovation. I mean, you talked about Isaac Newton, the gold standard. You talk to anybody on the street, they have no clue. They have no clue that that standard and that easy way to transfer value during the Renaissance is what enabled everything to happen. They have no concept of what that actually means. I mean, money to them is just something that your big brother government gives you. It doesn't have any meaning beyond that, where it really is one of the most meaningful things we have, which is what we have put our value into. And
yeah, I mean, how else do we establish trust and have social scalability and go from living in tribes of 50 to 150 people to like living in inner cooperativity between millions and millions of people? Like, we have to have an innovation like money to be able to do that. And it needs to be sound, because if it's not, as Goethe wrote about, you know, eventually the judges, you know, it's not quite right, but I'll make it right. Well, that was City versus Dover in 1991, and the U.S. Supreme Court refused to hear the case about what the definition of a dollar is. And so now we have political currency lurching from one crisis to another. And then the next line in Faust Part 2 by Goethe, the soldier asks not from whence it proceeds. You know, so we're talking martial law. Like, look at Venezuela. Like that's the deal. When you have unsound money, like, that's the deal. And so, like, we need to protect ourselves, and hopefully Bitcoin will be a release valve for a lot of this pressure, and we can have a fairly gentle transition. You know, nobody wants to see, you know, Exxon and Walmart and Amazon not being able to make payroll because the monetary plumbing and infrastructure is an insecure layer, right? And so they can't build a secure layer or a secure business, for that matter, on top of it.
Exactly. It's going to be a very interesting few years. And we're talking today on the 1 year anniversary of Bitcoin's all-time high, which plenty of doubters will come in and mention to you as saying, see, look at all this money you lost. But of course, today also we're 600 points down on the Dow. And yeah, we you really can't say the traditional system is that much more reliable. 10 years from now, So
Well, I
it's
mean,
a very interesting time.
I mean, first network effect is speculation. Like people
Hmm.
love to chase the rabbit, and because Bitcoin supply is limited in amount, we have to look at the the two different demand components of
Hmm.
speculation and transactional demand. And transactional demand doesn't care about the elasticity, the price for elasticity. So for that matter, we get these wildly crazy like booms and busts only because of individuals acting the way that they do. And maybe people have just been lulled into a false sense of security when it comes to the actual liquidity in markets out there because of things like the president's working group on financial markets, the plunge protection team, being able to create dollars out of thin air in a way like that so that they can stem bank runs and so that they can stem like failures with the pension guarantee benefit corporation so that they can do things like the 2007 2008 bailouts. Guess what? Mount Gox, no bailout. Doesn't work. Like when you have something limited in amount, like you have to really begin to calculate the amount of risk that you're taking on with counterparties and with people that you trust with your keys in terms of performance risk. Counterparty risk is where you have financial reliance. You're relying on their balance sheet, so there's hypothecation or rehypothecation or lending or something like that. But performance risk is just where the bailor basically, will he send the money? That will the valet bring your car back? Title
Yeah.
to the valet to the car doesn't transfer to the valet driver or attendant, anything like that. But they do have keys to the car, and they're going to park it, right? And
Hmm.
so that's a lot of what this proof of keys initiative that I've started. And it's applicable not just to Bitcoin; it's applicable to everybody in the cryptocurrency space. Like, take your keys and bring them home, from any third party out there. Run your own full node. Strengthen the network of the coin that you hold. If you got SmartCash on wherever it's at, hit BTC or whatever, run your own full SmartCash node and bring all your SmartCash back to your own node and hold the private keys into your own network consensus. And you're going to strengthen that network with that type
Hmm.
of activity. And I think that's great. Let's strengthen all the crypto networks, Litecoins, Dash, like even Bitcoin Cash. Like, try to run a full node there. Try to run, you really want to be fun. Like, try to run an Ethereum full node.
Oh.
Let's
Yeah.
see the differences between all the different coins and the scalability and the difficulties and stuff like that. You're going to gain some technical literacy. Like, it's only going to be a good experience for you.
Yeah, I couldn't agree more. It was actually kind of interesting because we were having a snapshot for an upcoming airdrop of a sister coin we're launching and called Bitcoin
Yeah, Bitcoin
Confidential.
Confidential. Yeah.
Yeah. And just the number of people who, oh, I just left all my coins in an exchange, or oh, I don't know where my private keys are, or anything like that. It's like, come on, guys. I mean, you are your own bank here. This is your store of value. You got to keep track of this stuff.
Well, yeah,
And
and as you learn how to manage your private keys in a safe and secure way, you're able to start claiming these airdrops and these forks in a safe and secure way, and you're not going to lose your money. One of the examples I give on proofofkeys.com, this guy, he had like $170,000, well, 335 Bitcoin Cash, and he wanted to claim his Bitcoin SV, and so he enforced a private key into like a wallet that he shouldn't have trusted. Not that I know of any wallets with Bitcoin SV or Bitcoin Cash that you can trust, but that's kind of beside the point. But
mhm.
anyways, all 335 Bitcoin Cash gone, poof. There's a battle scar, and that one's
Yeah,
gonna sting for a little while,
yeah.
right? Hopefully, he'll get back on the horse and he'll like use Bitcoin Core and buy Bitcoins, because by that time, Bitcoin Cash is probably gonna be, well. Let's not speculate on where that
Yeah.
thing's
Well, yeah. Well, yeah. I mean, that actually reminds me of a little story I like telling people. So my wife and I first got married. I was trying to explain to her how the banks worked. And so she just, oh no, I mean, they have our money, they whatever. So, all right, fine. Go to the bank and try to get $8,000 out, see what the process does. And she's like, it won't be a big deal. I'm like, you might want to call them as you're on your way. Just let them know. And yeah, after going through that process for about an hour and a half at the bank to get that much money as they were running around to try to find it for her, she finally realizes that, yeah, I guess we can't count on our banks. So
oh,
there's nothing like real world experience to teach you something.
yeah, and what do? They lower withdrawal limits exactly when you need it. right? Whether exchanges or banks. I mean, look at Greece. It was €1,000 a day that you could withdraw from the ATM. When all the banks failed, they lowered it to 50. If the ATMs even had any cash in them. And I mean, it's really crazy. Like, what do they want you to do? Like, get shoehorned into using credit cards? Like, I was traveling once, and like, I had to pay for something, and the credit card system was down, and it was like $600, and they'd already given it to me, and I couldn't really like give it back, and I had to have it in order to go where I needed to go. And fortunately, I had cash on me, and so I was able to pay for it with cash and like go on my way. Who knows how long their credit card system would still be down, or the internet or whatever. Like, and this idea that like, oh, you can only withdraw $2,000 out of the bank, like, that's so ridiculous. Like, is it your cash or is it not your cash? Because if it's your cash, give it to me right now in this bag, or send it to this Bitcoin address, or send it to that SmartCash address, or whatever. Like, send it all right now. And then you find out real quick whether it's yours or not.
Yeah, and that's the beautiful thing about your Proof of Keys initiative, is you're basically trying to prove through a scheduled bank run that the exchanges aren't doing fractional reserve banking.
Well, I mean, that's not really the intent, but it is a nice side benefit, and sure, they've been building for the last year, increasing their scalability. They should be grateful for something like this. All the exchanges should be sending out emails to all of their customers saying, we support Proof of Keys. We would like to have this type of event on an annual basis so that we can test our systems and retest our systems, because they need to work on being able to get in and out of cold storage and stuff. And people are like, oh, it's an inconvenience to the exchanges. Binance made $200 million in one quarter. Like, what do you pay these guys for? You pay them to process transactions like that and to process trades. Like, that's their job. That's what they're getting paid for by you. They're not getting paid to hold your private keys with their grubby little fingers and not give them to you when you ask for them. They're your keys. Ask for them. Prove it. It's very simple. Like, send the Bitcoin to that address right now. And okay, maybe it'll take them a day or two to go get it out of cold storage and like do multi-signature and like the processes and procedures. And that's reasonable if you're withdrawing a lot of money. But this idea that like, oh, we don't want to like cause extra work for the exchanges. Like, no, you're helping them test their system. Like, seriously, they should be paying you to do this. Maybe January 3rd. Maybe they'll waive all the withdrawal fees on January 3rd to help incentivize this, because they'll get a lot of useful data and experience from it. And then the other thing is like, oh, well, there's not enough transaction capacity with the networks and stuff. And it's like, that's what the network's supposed to do. Like, it's supposed to filter through and figure out how to prioritize transactions and which ones to include in blocks and which ones not. And the miners are supposed to do this. If anything, like, the network and the miners should be thanking us for this, because they might earn a little bit extra in fees. I mean, so what? It costs you an extra $1 or $2 to like do a transaction as we do it in a coordinated way like this. Like, that's not a problem. Like, plus it's good experience for you to learn about like fee management and like how transactions get prioritized. And you're like, oh, it's not in the blockchain yet, or oh, it hasn't got confirmed yet. Like, you get to learn like when you should worry legitimately and when you shouldn't worry legitimately. And if it's going to take say 6 to 12 blocks to get it included you don't need to worry about that. It'll get included, or there might need to be a rebroadcast, or maybe you can go in and do like a child pays for parent transaction or something. But if you submit your withdrawal request to the exchange or to the third party, and it's been a day or two, and it hasn't been broadcast to the network, you need to worry. They might not have your Bitcoin. Someone else might be in front of you in the line, like one of their buddies. Like this is a big deal. Like, how many people were waiting in line for Mt. Gox to broadcast transactions? 850,000 Bitcoin worth? Like, do you really want to be like that? And then, so going through a combat readiness drill like this helps give us the skills and the technical literacy and the comfort to know that we can do it on our own. Because the last thing you want is for there to be a legitimate rumor about an exchange potentially failing, you having your money on that exchange, but not having the technological literacy or comfort to actually withdraw it, right? Because you've never done it before. Like, you're just a flabby couch potato on this war for monetary sovereignty, and you don't have any, and you don't have any skills either. And so, I mean, a lot of people just need to grow a spine and do some Bitcoin transactions and verify them with their own full nodes and hold their own private keys, and then you get to grow up. You know, you get a promotion. You're not a private anymore. Maybe you're a lieutenant, right?
Exactly, and that's something that we really need to learn to do, is take responsibility for ourselves, our own knowledge, and our own funds. And on that same note, you were talking about, you think everybody should run a full node. Is that your opinion, that everybody should run a full node of their favorite coins at home?
Well, for the proof of keys event, yes, hold your own private keys and run your own full node. Why? Because the private keys, that's your power to move the coins around. But running the full node, don't trust, verify. You know, so if you're using things like Ledger and you're using Ledger's node, or you're using blockchain.info's node, you're not doing the verification yourself. You know, so run that full node, do that verification yourself. And because it's an economically substantive transaction, and you're running that your own full node, you're actually strengthening the network, right? And like, you own the coin in that network. Why would you not want to strengthen it? You know, it helps the value proposition of the network, of the thing that you own. So like, one, it's in your own self-interest to don't trust, verify, hold your own private keys. You're strengthening the network of the asset you own. Like, all the way around, to me, it just seems like a really good idea, you know?
Yeah, I would, I agree with that completely. I've been running my own nodes for a couple of years now, and it's the thing to do. You know, you are part of the network then. You feel more involved. It's great. Related to that. Yeah.
Well, you know, tangential, you know, learning how to run these full nodes and everything, you also get to see how different networks, you know, just how the full node software works on the different networks. Like when I was running my first SmartCash full node, like, it took forever to sync it, right? Because there, you know, and there's technical issue, but, you know, after a few months, like, guess what? Like, I was able to sync a full node on SmartCash, like, in a couple days. So, and even faster. So, you know, this is it's part of, like, getting your technological literacy. You know, it's just an important skill to develop if you're going to be in this space.
Yeah, I mean, how can you judge any coin if you can't judge the actual usage of the coin? If all you're doing is trading with it, what are you judging anything on? What other people say?
Yeah, I mean, go just jump in the garbage can with Oscar and, like, gamble, you know, because that's what you're doing. You're just gambling. But I mean, all these people, they all got opinions on all these altcoins, but, like, none of them have run a full node on the altcoins. I mean, it's hilarious. Like, United Bitcoin, which was Garzik's fork, and the blockchain completely died for, like, over a month, I think. Like, it didn't even find a block for, like, over a month. It's dead. And this thing's still trading on the exchange. Like, people are still buying this thing, you know, because it was like a Bitcoin fork, and it's just like, wow, that is just wild. Like, why would you buy something where the network is dead?
Well, that just, you know, but you're right, is that it is speculation, and when people speculate, you know, a lot of people have no idea what they're actually speculating on. It's just all TA or whatever to them, or reading chicken on trails.
How's that working for you in the last year in the altcoin space, right?
Man.
I mean, it's just been brutal. But I guess it's just been misallocation of capital, and now the profits and losses are getting assigned to the people who deserve them.
Yeah, that's it has been a very rough year for all the market. But I mean, you know, you've been through a few of these Bitcoin and crypto downturns. I'm sure you can talk a little bit about the 2013, 2016 one, and how that went, and how everybody felt at the bottom of that compared to now.
Yeah, well,
I guess that's a great question too.
Yeah, which 2013 one, right? Because it, like, ran from, like, $7 to 266, and then crashed to 60 because Silk Road got hacked. I mean, got seized, and then it ran to, like, 1,300, and then it crashed, like, to 182. I mean, this stuff it's just so much fun. Like and that's just part of the territory, you know, which is why I came up with I didn't come up with it, but someone named it the Mayor Multiple. I came up with it, but then someone else named it, and there's like mayormultiple.com. And this is where you can at least get some feeling on whether things are expensive or cheap based on previous price action. Just, you know, filtering out daily noise with the 200-day moving average. So, you know, I kind of like to do that, but I mean, that doesn't help you against something like a BitConnect, right? Or if the whole blockchain like seizes up and fails, like we had in March, you know, with when Bitcoin forked, and then in the morning. I mean, fortunately, we got it fixed and resolved, and most people didn't even have any idea it happened. But it lasted like 30% in 10 minutes. I mean, this stuff is highly entertaining. There's a lot of entertainment value in this industry.
Oh yeah, you know, cancel Netflix, watch the charts. And you know, that is a pretty good question. Like, if you compare this to earlier ones, like what do you see happening in the space now that you didn't see in 2015? Like, what's your overall feel of things? Like, are you happy with how everything in crypto has progressed? Is this?
Oh, yeah. I mean, I kind of feel it's great. Yeah, we've had lots of learning experiences one way or the other. A big difference is, you know, the rise of all these altcoins, especially like Ethereum and then ERC20 tokens and stuff on top of that. The sophistication of the traders that are in the space now. I mean, these are the biggest firms on Wall Street, like biggest hedge funds. Like, they're really smart. Like, Bitcoin derivatives are trading on Ledger X, Backed, and NASDAQ and Fidelity and Eris Exchange are going to be rolling stuff out. The professionalism is just like going through the roof. So, I mean, I couldn't be happier. I think crypto as a whole, and Bitcoin specifically, because it's got the network effects, I mean, this thing is getting to be just an absolute Godzilla. And it's going to be a black hole on the world's balance sheet. I mean, we talked about everybody's fiat wealth like evaporating. Guess where it's going? Alternate universe with Bitcoin and all these altcoins. And then we've got all the additional innovations happening, like Lightning Network and Xiaomi and eCash servers that settle into that, and Mimblewimble and Grin and smart nodes and master nodes and proof of stake. I mean, that's an interesting thing. And then like hybrids. And I mean, there's just so much stuff going on. Like, it's great. We got to experiment with all of it, you know, and people get gains and people get losses, and they have stuff to do, and it's just fun.
That's great. I love to hear that. And, you know, it's good to have unbounded optimism at a time like this. And I agree with
you. Well, in crypto, I mean, crypto winter's never any fun. Like, you know, I guess some gnarled war stories. Like at Kraken, we had to lay off 65% of the staff in the previous bear market. And then our competitors, in a lot of cases, like, they had to go out of business. You know, and so we acquired them, like Coinsetter, Glidera, CryptoWatch, CA Vertex, like some others. So, you know, if you've got sufficient balance sheets and you're strong financially and stuff like that, there's a ton of opportunity to be had in the bottom of the crypto bear markets in the winter. You know, and I think it's great to like have this starvation and freezing to death of a lot of the weaker players, and then whoever kind of makes it out on the other side, they're kind of fit for purpose because they survived the bear market. And then, you know, we get to lay the foundation for a next big run. And at the first Satoshi Roundtable, I gave the opening kind of welcoming talk speech thing at dinner. And I was like, you know, look to your left, look to your right. Like, these are the people you want to do business with because they're here in the bottom of the bear market. So they're probably still going to be around like when the bull market comes and all this hot money and like all these like Lambo Moonboy ICO clowns like come into the space. Like, you can't build long-term relationships with these types of people. Like, you know, so if you make it through these crypto winners and you're still around and you're still doing the thing, like, that's staying power and that's grit. And that's like, when you're looking at who do you hone in on for noise versus signal, like, you want to hone in on people that have been around, that have been through these crypto winners, because, you know, they're not just flabby couch potato, like crypto warriors, like during the summer. Like, they've like trudged through the snow and like had bleeding feet, you know, like Washington crossing the Delaware and stuff. And so, you know, this is a very important time, and I think a very good time for crypto. And in my opinion, the longer the winter goes and the more painful it is, the better, you know, because it just cleanses out that much from the ecosystem, gets the factors of production to the stronger, more worthy hands, lays the foundation for the next bull market. And the amount of professionalism coming into the space now, like, it is just huge, you know, lots of talent, lots and lots of talent. And so crypto and Bitcoin, like, they're not going away. So, you know, just hodl. And this is the time to buy. Like, Mayer multiples down at like 0.52. You know, you buy when it's at 0.52, you sell when it's at 3.7, like it was a year ago at 20,000, you know? So if you sell, I think there's a portion that you should never sell. You should you should have Bitcoin and you should hodl it and you should never sell it, like a certain portion, you know, and then you can trade and speculate and everything with other portions. You know, people have this very binary way of thinking, and it's like, no, you need to have like compartmentalization with your assets and your strategy and a lot of this in order to, you know, be temperate and balanced and stuff.
Yeah, don't go all the way in any one direction. Just, you know, keep working.
Yeah, and take some gains, you know, when stuff gets expensive and other stuff gets cheap, like take some gains, you know?
Yeah, more people wish they did that in January, I'm sure. Or March even.
I mean, I did. You had to do something with these fork proceeds, and I had to send some to the IRS. So I might as well keep some others and fund lifestyle and stuff, so that I, you know, am able to keep hodl ganging.
So yeah,
and don't borrow. You know, neither borrower nor lender be. You know, Hamlet's Shakespeare. Like, you know, a lot of people, I think, they want a hodl gang, but then they use their Bitcoin or their crypto as collateral to get a loan, and now they're getting margin called, so they're forced sellers at lower prices. You know, that's kind of the opposite of monetary sovereignty. You know, monetary sovereignty is having this alloidial title, like having no superior. And so, you know, neither borrower nor lender be. I don't do the debt thing. And also, you know, just rein in your spending on stuff. Like, I kind of like the concept of a Bitcoin fast. I think it could go great with proof of keys. Like, pick a 24 to 36 hour period. Don't eat or drink anything, like no food, no alcohol, and take what you would have spent on that and instead just buy some Bitcoin and withdraw them from the exchange. You know, and then you get to participate in it. Even if you don't normally keep keys there, you get to participate and you get to acquire some more Bitcoin, throw them in your hodl stack. Didn't cost you anything because you just didn't eat for a little bit. And you get to like tone that kind of mental and emotional discipline, you know, because you're hungry a little bit and you're like, yeah, I'm hungry, but I'm going to be hodl ganging a little bit more.
So related to something you mentioned earlier about the more professional players coming into the market with like Backed and, you know, several of the other big ones, and, you know, MasterCard trying to do a patent for a fractional reserve crypto lending and stuff. What are your thoughts about what the traditional Wall Street people coming into the crypto space means?
Yeah, I mean, it means a lot of capital, that's for sure. You know, especially with hedge funds and family offices, and Bitcoin's an uncorrelated asset, you know, so pension funds, those Yale finance professors, they talked about having 4 to 6% in Bitcoin, you know, in order to, and it would help with returns and everything. So, I mean, this is an uncorrelated brand new asset class, like, and now Wall Street's going to be coming in, and they're going to be building out the 6th network effect of financialization with derivatives and other financial instruments. And that's, they all exponentially reinforce each other. So, I mean, this is only going to be positive, but in a lot of ways, it's like you got a little orange with Bitcoin, and you have a straw, and then you have like an ocean of financial capital, and that straw can, like, that capital can now move into the orange, where previously it couldn't do that. And so, you know, there's always enough Bitcoin. It's just a function of price. and so we're gonna. This could be a very interesting exercise for Wall Street, because, Yeah. I'm sure they're probably stuffing their bags right now as much as they can, and they're probably funding negative PR, and they're probably funding disinformation and misinformation. Well, why? I mean, you'd want to, because you want to keep your competitors confused, and the people on the other side of this interview are competitors, so like Goldman and stuff. And yeah, so you've got to be able to hone in on signal and not noise. And yeah, I think Wall Street and these hedge funds, they're probably going to be funding the increase of noise, so it's going to get increasingly more difficult to actually like understand what's really going on.
Interesting. That'll be interesting. I do a weekly news show with Naomi Brockwell, so that could be interesting to go through as this continues on and more of that news comes out, because it is hard to tell like what is important, what is even real versus what actually needs to be grabbed onto. So that's cool. I'm glad to get your opinion on that, because there's a lot of back and forth that, oh, we don't want the banks in this space, but they're all coming.
They're coming. Like,
it's
you can't, like, I mean, Bitcoin is equal to one and all, just like gold. Like, gold doesn't care if you're Mother Teresa or the Third Reich. I mean, and that's how the Third Reich funded their war machine, was through the interest rate manipulation and mechanism in order to conscript all the resources from Europe and the countries they conquered into the war machine. Like, sound money, like do you really want a monetary unit that has political philosophy like built into its operation, things like AML and KYC? Or do you want something that's neutral to one and all, can't be manipulated? So I mean, these are things that we have to kind of think about, especially as we move into an era where we have programmable units like this.
Well, that's an interesting thought, because we have right now Patreon and PayPal and whatnot all kicking off all of these people just because Mastercard don't like the stuff they show. And, we're all like, what are we going to do? I just started working with bitbacker.io. Have you heard of them yet?
No, I haven't heard of them. But, I mean, we saw the same problem with Operation Choke Point. 20 industries targeted by the Obama administration, totally legal, but financial institutions to just not service them. Porn, check cashing, payday lending, marijuana, etc. And then what about WikiLeaks and the banking blockade? Just engaged in freedom of speech, and yet having their monetary utilities turned off. Like, this is not that having political currency. That's an insecure layer. You need a secure layer that doesn't have those types of attack vectors and surfaces.
Yeah, just because you can use that insecure layer for your own good now doesn't mean somebody else can't use it against you later, and that's just
you don't know who's going to be in power in 20 years or even in 8 years. I mean, it was fine with Operation Choke Point under Obama, but now what do you do if it's now Trump's in charge? So let's target like all the left, all the left for stuff. The IRS targeted people on the right. Like, okay, now it's time to target people on the left. You don't know who's going to be in power. So like, really, what the solution is the principle of least privilege. Like, you give the least amount of privileges necessary to any institutions or individuals that you do trust. That way, if they abuse the trust, they cause the least amount of damage possible.
I guess I've never heard that particular principle before, but I love that. I will have to put that in my repertoire. That is perfect for this sort of thing, because that's exactly what we want. I mean, be you a minarchist or an anarchist or whatever, you don't want to trust anybody more than you have to. You don't want to give them more power over you than is necessary to get this particular task done, much less what we've given our current governments of, whatever, anything you want you can take, is how it is right now.
Yeah, don't trust, verify, and this especially in realms of like cybersecurity and like accesses and permissions and stuff like that like, just principle of least privilege, extend trust to the least degree possible. As Nick Szabo says, like, trusted third parties, they're security holes.
Yeah, exactly right. I mean, that's what we see every day. All these security leaks and the information leaks that happen out of every platform we've freely given all our data to online. That's cool. Well, I think we've almost running on an hour, or I guess 40 minutes here. I guess one other thing, if you were going to say something to somebody new who's thinking about buying their first tenth of a Bitcoin, what would you tell them?
Yeah, there's no substitute for experience.
Okay.
Bad decisions come from experience, and then you can make good decisions because you have experience. So just going through the process and learning how to do it. Participate in proof of keys. Figure out how to hold your own private keys. Run your own network consensus, your own full node. Just do it. Take a step. Don't get analysis paralysis. Don't have procrastination. Just get it done. Get it done. Do the work. Do your homework, and then you get the optionality to figure out whether you want to allocate more capital to it. Tenth of a Bitcoin, that's $350 right now. That's not going to change. Hopefully that's not going to change your lifestyle. And if it is, then only buy $50, right? And maybe don't eat and drink stuff for a day or two, and then use those funds that you would have spent on that to buy the Bitcoin. That way you're not don't go into debt to buy Bitcoin. Don't put it on your credit card. This is about monetary sovereignty, not making yourself a slave to somebody else. So, that's what it's kind of about is, you got to invest in yourself, for crying out loud. You gotta do your homework, and you got to do the work, and you got to get that experience. And yeah, you might scrape a knee or two, learning how to ride a bike, but there's tons of people to talk to, talk on the forums, go to meetups, all that type of stuff. And you'll be surprised, just one, how much you'll learn, but two, just how much fun it is. This is a blast. It's so much fun. So, that's what life's about. We need to be having fun, and you can't really have a lot of fun when you're worried about somebody else hanging this sword of Damocles over your head because they have control over your money. You need to be free and independent and have control over your own money. And then that relieves a lot of stress out of your life.
That's perfect, Trace. Thank you very much. Really appreciate your time. Again, this is Trace Mayer. Check out his podcast and his proofofkeys.com. And this has been another SmartCash Smart Talk radio episode. Thank you very much.
Yeah, thanks so much for having me. Keep up the good work.
It's our pleasure.